Hi, I'm Andrew Davidson, SVP and Chief Insights Officer for Comperemedia.
And I'm Mark Miller, Associate Director of Insights for Payments and Lending at Comperemedia.
We're going to be talking today about credit card marketing in 2020. Now, earlier this month, the Federal Reserve Bank of Philadelphia published an excellent report on the COVID-19 pandemic and how it's impacted the supply of credit in the United States. The report revealed that as the COVID-19 crisis evolves, lenders continue to respond cautiously, reducing availability of credit to new customers, while also offering support for existing customers. You can find the report at philadelphiafed.org.
Now, the Fed based its conclusions on two key Comperemedia indicators for the supply of credit. These are first, estimated volume of account acquisition mailings, and second, estimated account acquisition spend on digital channels. These two indicators are pivotal to the health of the credit card industry, and we thought we'd take a minute to update you on the latest numbers.
Okay, so let's start with the estimated volume of account acquisition mailings. So we're going to show you a chart that looks at estimated volume of account acquisition mailings for the last 2-3 years. At Comperemedia, we project estimated volume. This is looking at new credit card acquisition. And what you can see that in June of 2020, some 57.5 million offers for new credit cards were received by US households. If you study the chart, you can see that we started to see the decline in April, and then it severely dropped off in May and June to just 57.5 million offers. So, I mean, down significantly from the 300 million or so that we saw per month earlier this year, and the lowest we've seen in the last 10 years, and certainly including any point during the last recession. Back then, of course, it took a number of quarters for us to get to these sort of low levels of mailing, but this time it's literally dropped off a cliff in the last 2 months.
Yes, and combined with a similar drop that we've seen in personal loan offers, as well as some credit cards and HELOCs temporarily being closed to new acquisitions, and the general tightening of credit standards altogether, consumers are seeing far fewer borrowing options. And with this uncertainty around future stimulus and the state of employment, demand for these products is likely to rise. So let's move on to look at the estimated account acquisition spend for credit cards in digital channels. So this is a view of daily spend since the beginning of 2020, including Facebook, digital display, and video ads. So compared to the mail offers we just saw, you can see here how much more quickly issuers were able to adapt in the digital space. So mail volumes didn't really start to plunge until May, but digital started to drop off in mid-March, kind of right as the shutdowns were beginning in the US. And while it's still a small sample size, we may be able to see some more real-time responses like upticks in anticipation of Memorial Day and the 4th of July, when people were expected to get out and socialize more and potentially spend more on their credit cards, followed by another pullback in marketing spend in early July as COVID cases started to drastically increase in states like Florida, Texas, California, and Arizona.
I mean, it's interesting. I mean, digital is where we first saw the decline, and digital is really where we'll be most likely to see an increase in the supply of credit as we go forward. I mean, in recent years, we've seen so much acquisition activity migrate to digital channels such as Facebook advertising, display, and video, that it's fascinating that now we're using spend on digital channels as a key indicator for the supply of credit, which is very different to the last recession. So how do you think it's going to play out?
Well, we've witnessed a lot of creativity from credit card issuers, offering special category bonuses on things like streaming and food delivery, statement credits to offset some of those high annual fees. And as they continue to test these features while at the same time fine-tuning their risk models for new acquisitions, we may start to see marketing levels increase again. But it might be a long time, if ever, before we see those 300 million monthly offers in the mail.
Yeah, I agree. This is going to take time. Card issuers don't yet have a good sense of, customers' potential risk profiles, which have, changed as a result of credit card deferrals and other forbearance programs. Effectively, they're flying blind. Where I do feel encouraged is with the innovation. We've seen a number of new product launches in recent weeks. US Bank, Verizon, we've seen fintechs, Chime and HM Bradley all launching new credit cards. So that's encouraging. And I think going forward that there will be pockets of opportunity where we will see increased activity. So thank you for watching. If you have any questions, please reach out to us here at Comperemedia.
Thank you.
Thanks.